Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So market is challenging the weekly support area. So as we talked about this already in the previous few videos, as it will be a really unstable performance around 106. It's just because 106.11 is the first level, nearest level of the wide confluence weekly area. And this brings some nuances to the trading process. So definitely, if you trade on the daily and high time frames, this is not the point where you would like to take the new short position. So you obviously should wait for a pullback or some performance that lets you to consider some entry points at the high levels, some response of the market. And in fact, currently the chances exist only for trading on the intraday charts. Overall context remains bearish by far, as on the daily chart, as on the high time frame, on the intraday chart, sorry. But at the same time, on the daily chart, you could see what's going on. So once market just challenging the lows, right there, touching the weekly area, it shows the pullback. For example, yesterday we've got even the bullish grabber that's just taken out of this top, at least theoretically. Today, few minutes ago, it was really significant acceleration on the intraday charts. Market once again trying to take this level, forming slightly lower for a few pips, new lows, but now you can see it's showing another pullback. So definitely here some support exists. Although in general, on an overall background, if you will take a look on a 10-year yield, currently I do not see any relief. So actually the market is running to the 4.5% already, showing acceleration. So now it's a lot of talkings about United States debt, for example. It's such interesting numbers. It's just for one day, overall debt is rising for 50 billions. So it's just some astronomical numbers, and it's not becoming so obvious that it's triggers the overall performance across the board. So actually on the 10-year yield, you can see what's going on, and currently I do not see any relief. So actually, if we take a look at the daily chart, yes, here we could see minor drop, but this might be just a preparation for a weekend, because rally on this week was really tremendous. So on the weekly chart, as I already talked about, this half a year ago, that we expect upper direction yields, and you can see this arrow pointing on the 5%, and it means that in general on the euro currency, it's no really background to expect some sharp reversal or something that sort. And you could see it even on the all other time frames, for example, on all other markets. So for example, our yesterday analysis on the Bitcoin, and take a look what has happened. So we said that should be 2440, and market has collapsed. So if you'll take a look at the stock markets, DAX index drop, S&P drop, so all the stuff is going on the rising on the United States dollar and rising on the yield. Why in general is happening? It's just because, guys, rising on the yields, making bonds cheaper. And as you understand, the United States Treasury bonds is the primary collateral across the globe. So it is using widely for some margin for collateral on different trades on the derivative market. Once bonds becomes cheaper, traders will have to add margin to compensate this drop in the collateral price, and that automatically increases demand for United States dollar. What's really now is going on? So investors, even to fulfill the margins, sometimes have to sell some assets, and that's also might be one of the reasons the dropping of the stock market, on the gold market, and so on. And from that standpoint, currently it's very difficult to suggest that in euro currency we could get some really sharp reversal in upper direction, but at the same time we still have strong support area. And nuance of this trade suggests that in general you could try to take positions, short positions here if you trade on the intraday charts, but on the pullbacks, when the pullback happens, you could consider taking the short and close the position near the lows, because there's markets that's well hitting the elbows with a buyers and those who really stand with this support area. So that's the major tactics. Minor pullback, take the position, collapse, close the position, something of that sort. And you can see something that's actually we have here. So that was our previous level. This market was not able to break it. Now we drop out of it. We have another line, next one. So with the pullback here, you could consider taking some short positions with placing stop somewhere above this area or above even this tight consolidation and see what will happen. On the hourly chart, our yesterday setup has worked perfect. So if you remember, we talked about the Brent beta that actually accurately has started from the 30% level. It was even more than the target has been completed. The retracement was deeper than the 618, and later, as you can see, market even has formed another regardless cheaper to sell opportunity for taking the short position. So with the application to current situation, what we have, as you can see, this is your trading range probably will be. For the taking position, you need to wait for the pullback to some levels. By the way, currently you probably could see this retracement. If you trade on very short some time frames below the hourly chart, that will be your invalidation point. As we said yesterday, take a look at this level. Market should not break it. This great opportunity to take in the short position. So this time it might be once again. So market could reach this level. You could consider taking the position to stop somewhere above this area with the target somewhere around these previous lows. This is the common tactic that you could use. So if somehow market will break it up, it will just tell us that we could get some kind of the deeper pullback right now. So that's actually all that we could do, because for taking the long position currently we still do not have yet any bullish patterns, so it's yet to be formed, if it will be formed at all, as a response on the weekly support. That's why currently, and with the bearish trends across the board, we do not have any context for taking a long position by far. For bearish trading at the same time, we can't take the position because of the strong weekly support. And the only thing that you could do, as I said, is just scalp trading on maybe this some tight range with the tactics that we just have discussed. And actually, let's see what will happen on next week.